So today we are going to be looking at a market structure shift. So let me first illustrate something really simple here. We are going to start with a bearish market structure shift. So this is it. If at all the market has been moving, making these kind of patterns, you get these kinds of patterns. Oh, no, 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 no. This is what I wanted. Let's say we've been in a bullish market, something like this. We make highs and higher highs like that. And then if at all the market displaces a high and then immediately takes out an old low, you get, we call this a market structure shift. We call that a market structure shift. We've taken out this high here and now we displace lower, you get. And displacement, normally we are going to be considering a sharp move, like an aggressive move that normally leaves behind a fair value gap. So that's one of the things that we look for when validating. So let me also illustrate a bullish market structure shift. So for a bullish market structure shift, we mean the market has been bearish, making lows and lower lows like that, and then we take out an old high. You get, if we take out this old high, we can call this a market structure shift. We've taken out the old low and quickly, by the quickly, consider that quickly we displace above. You get, when we displace above, normally the market will leave behind a fair value gap. So these are confluences that I've talked about in the past that we can consider. So which means we look out for this zone here. We can consider this zone there. You get, there is something I want to illustrate. You get, we can consider this zone here, and then our stop loss is just down there, and then we target some POI up here. We shall see that, and then for the case of bearish, we shall be doing something like this. You get, something like this, stop loss slightly above, and then we target lower. We target lower. So you get that. So that's a simple illustration. So I believe you're going to pick it more when we come on the charts. So let's come and illustrate here. So we have a very good example just over here. We have a good example just over here. Let me illustrate for you. So what do we really see? We can see that here previously the market was moving in an upward trend, making highs and high highs like that. You get, so we can call that a bullish market. So now we see that the market was able to take out this high here. You get, we took out that high, and then immediately the market came with displacement, came and took out an old low. You get, we took out that old low. So now to we can call this a shift. You get, we can call that a shift. By the way, there are different types of shifts, like, and even there are some high quality market structure shift, and then there's some low quality market structure shifts. So now if we look at this zone, one of the confluences that we would use, we can see when we take out, let's say if at all we want to be bearish, one of the things that we're looking out for is for the market to take out liquidity. And then we can see that here the market had taken out buy side liquidity. It would increase it would increase our confidence that the market would be selling. You get, so now we've gotten our shift, we've taken out buy side liquidity. Now we target lower. Most of the time I like targeting this short term low next to the swing point, or next to the swing point. You get, or the short term high next to the swing high, short term low next to the swing low. So I like targeting that. So which means we shall be targeting that if at all this is the zone. Now there are confluences that we look out for here, which I'll be talking about in the next video. Our stop loss is, we target our stop loss, we just put it slightly above there. Hold up. And our entry is just there. And then what is our target? Our target is this point here. You get, that is our target. You get, so you can see that you can get a good entry over there. You get, that is one of the entries. So let's look out for another one, another market structure shift. So we can see, by the, let me first delete those ones because they will confuse us. Let's look out for another market structure shift. They happen a lot in the market. That has been the case for a bearish. You get. So let's look out for one other example. Actually, not one only. Let's look out for more examples. Another bearish example is just over here. You get. So we can see. No, let's get a bullish example. It's over here. You get. So we've seen the case for bearish. Now let's look out for case for bullish. No, now yes, sometimes I really like it when we identify the liquidity. You get the targeted liquidity. Now here the market has been bearish, as we can see. Let's say the market is moving and then it's moving lower like that. So it's bearish. You get. So now we want to study, and now most of the time the market is targeting, we look out for how the market reacts as it approaches and reaches and reaches these points. You get these swing points. Now we have a swing low over there. Now we can see that the market came and took out this sell side liquidity. You get. So now when it took out sell side liquidity, we can see that a short-term range over here. This we have this low being taken out. You get, the market took out that low, and then immediately with a displacement, with high momentum, displaced higher and took out that high. So we can see that we got a shift over there. You get, we got a market structure shift, and one of the strongest confluences that we can rely on that the market has shifted bullish. We've taken out sell side liquidity, and now we get a shift over there. So now, what do we do? What do we do? We've gotten our shift. We know the market is most likely to return back and then maybe pick up our order. So now, what do we target? We are targeting, yes, the target is these highs, but sometimes the market, you may not be so patient to reach there. You get, the most sure take profit point normally is this point here. I told you the most recent, if at all we are bearish, this is what I'm telling you. If at all we are targeting a point up, let me no, let me illustrate it pretty quick here. If at all we have these points here, you get. So if at all we are targeting a point up, yes, we know the market is looking out for that. So for me, most times I target this lower point here. Like, this is the most sure entry. You get. So if at all they don't take out this high point here, at least most likely, if at all you've done your analysis properly, you may target this one here. So if at all you're patient enough, you can target this like this sell side liquidity, like the topmost liquidity. You get, buy side liquidity. So that's what you may look out for. I hope you've seen that. So now we can see we've gotten our shift over there, and this is our target. At least target 2 is over there, but normally some people don't target that. So now we look out for our entry just over there, and we target these points here. You get those points over there, and our stop loss is just slightly below this shift here that you're seeing over there. You get. And then you can see that the market moved when it came back. First, wait, I wanted to, now possibly in the next video I'll be showing you the where to place your entry. You get, because this is also in a top it requires a lot of analysis, like some kind of teaching. It may take me some time. I cannot just give it out in this simple video. So now the market returns back, and then it picks up your order, and then you take your profit there. You get? So if I can look out for one more example, by the these shifts they happen a lot. You get? They happen a lot. But as I told you, they are going to really help you match if at all you are in a high time frame POI. You get? They can be some good confluences. For instance, you identify a POI on, let's say, M15 or H1. Let's say it's a supply POI. So if at all you get a shift within your POI, let's say you've highlighted your zone on H4, and then you see a market structure shift on M15, you will be confident to take that entry and then ride it to which point you want, to whichever point you've marked out. You get? So that's how they really help. And then let's get one more. Let's get another one. So we can see even here, by these shifts, they happen a lot. We can see that the market took out this high. You get? We took out that high, and then quickly the market displaced lower. You get? So the market displaced lower. I can call this a shift. So the market revolves back. So sometimes we target a fair value gap. We can target a breaker order block. For instance, this case, the market targeted a breaker order block just over there. You get? They targeted a breaker order block. It returns back. You take your entry, and then you target lower. You get? You target lower. So I just wanted to show you that. Then let's look for uh let's look for another example. It's just over here. You get? Let me show you. I think this is going to be our last one. You get? We displace lower. You get? And then quickly we displace higher. You get? So there are some instances where the market will not come back. You get? So the market here didn't revolve back. Why? One of the reasons that I could give, at least here, we're not seeing any sell side liquidity being taken out, like on this particular time frame. You get? This could have been a better entry maybe if at all you were on a higher time frame. You get? So not all shifts you'll be able to get those entries properly. You get? It may not be easy for you. It may not be easy for you. But then if it goes, sometimes after some time, the market still will come back to this. So what we look out for by the in these shifts, we like those shifts with fair value gaps. You get? Fair value gaps. We can see we have a fair value gap over there. You get? And then these fair value gaps, they have to be overlapping with something. You get? At least at least an order block. Most times by these are going to be order blocks. So if at all we consider this fair value gap with this breaker order block, so you can see that later on the market, if at all you had placed a pending order, and then let's say you were targeting, let's say this is a market structure shift, we have a breaker order block over there, and then your entry is there, it hasn't been picked up. You get? By the way, for me, if at all, let's say, because let me just explain something really simple here. Yes, we have a fair value gap over there, but then this whole area is an imbalance. You get? These are all candles like with gaps. You get? So if at all I'm targeting uh uh so here sometimes I may just target this order block here. You get? This breaker order block, that breaker order block, and then on that breaker order block, sometimes some entries can be really confusing. So you can enter here at the breaker. You get? You can enter here at the breaker, and then your stop loss is let me illustrate it for you. If at all there's some risky entries, your stop loss is put below this point here. Now, sometimes the risk to reward will determine whether you take the entry or not. You get? So, by the this is a very, very, very big stop loss for me. I cannot like it. Now we have this swing point here. By the I told you guys we target the swing point. We have this swing or this supply area here. You get? So given that this is a supply zone, this is our first take profit point, or this is the most sure take profit point. Why? We may not target this supply area above. Why? Because we have a nearby area of supply. So we target the most recent swing high, or the most recent high, or supply area, or the most recent demand area. You get? So if at all you could take this would be your take profit point one. You get TP1, and this is your stop loss. And then if at all you wanted to aim higher, uh, your, T, your TP2 would be that if at all they would go higher. You get? So that's it. Sometimes you don't win it the way you may want it to be. You get? So TP1 was it, and then they came back. The market came back. So I believe I've tried to illustrate the market structure shift. Now, why have I done this? I've done this on purpose. It's because of the upcoming content. In the upcoming content, I'll be using that word so much. You get? So that's why I brought it early enough, so that if at all I be explaining something and I use it, you'll be able to understand what I'm talking about. So you stick around, because there are some new changes that I'm going to bring on the channel as far as how I deliver the content is concerned. You get? So I want to really simplify things. I don't want to complicate things, because it's been a concern from most of you. So if at all you've liked this, please feel free to like, feel free to share, do anything good for me. You get?